Many backward steps are made by standing still. Kevin Kelly. My friends, every day, 10 to 15 minutes, don't stand still. Get into these markets, practice trade. You can do this. Stocks and bonds are up, gold and Bitcoin down. Let's look at where we are on the S&P 500. After several days of down movement, we see things popping up 1.50%. Would love to see things reset before they roll back over. We need the STC, of course, to go above this center band here between these two lines. It's a little gray, maybe it sort of looks green on my screen to me, but this center area, that gives us a reset when it goes above. So we need that to happen and then another downturn to take place so we could potentially jump in if we see changes as we move forward going in that direction. Now, it's red on the STC on the half-day chart. Let's look at the 2-day. We can see where it has gone red. There we go. And again, this latest 2-day candle not hitting the lower low yet, so we see that, of course, in the half-day. It's nice when you look at these charts and you can see how the half-day affects the 2-day and the weekly, but then you also see, all things being equal, the market tends to move in the direction of the largest chart. That is why we share every week with our Patreon supporters. We look to try to find 20 weekly vertical crossovers, either up or down on the S&P 500. We share those on Thursdays, so that at the close of the market on Friday, right near the close, of course, if you wait until the close, you're not going to be doing any practice trading. It's too late. But there toward the end of the close, you follow our rules for that, and you look to jump in and follow the biggest wave, which is, of course, the weekly. So we're still green on the STC on the weekly chart, but we can see that we do have a nice big red down candle. Hopefully we will see things continuing. And again, not hoping the market will go south, but if it does, we have things we can do, like what? Well, that would be SH, Sierra Hotel. That is the single inverse of the S&P 500. It goes up when the S&P goes down. And the converse, the inverse is true. When the S&P goes up, it goes down. So keep that in mind. Now that is the single inverse for the S&P. The single inverse for the NASDAQ 100 is, of course, and let's go to the half day there. The single inverse for the NASDAQ 100 is something called P, Papa, Sierra, Quebec, PSQ. Now there are other inverse funds. There are, of course, 2 and 3 time inverse funds. But again, just for our practice trading, we like to take a look at those two, SH and PSQ, for the S&P 500 and the NASDAQ 100 respectively. But let's take a look on the proper chart. Just wanted to share those two with you. And I'll put at the end of today's video too, our training, inverse funds, how to make money when markets crash. You'll get all of those. The 3 that we have. We don't have one on gold. We do have one on 20-year bonds. The reason we have one on gold, there is one DGZ. The problem is it's not very liquid, which means the bid and the ask is too far apart, which means the minute you jump in, you're way down, and if it doesn't go your way, your losses are accentuated. Plus, it's an inverse fund. Resets every day, has higher fees. Again, this is kind of stuff you want to practice trade to see if you think it's worth doing. Otherwise, just wait to go long. You don't have to go short. Okay, let's talk about the NASDAQ 100. It is up for the day 1.45%. And of course, up in the morning, about the same in the afternoon, topping about the same. Of course, still red on the STC. It hasn't reset either. Did have things bounce off the 200 EMA there. We look at where we are on the 2-day. And of course, we got 3 red down candles, not hitting the lower low yet, but the STC is negative. We look at the weekly, and of course it has, unlike the S&P 500, the NASDAQ 100 has pushed through the 200 exponential moving average on the weekly chart. Still green on that weekly chart, though. It has reset, so we'll be looking if in the near future things rotate over there. Let's move on to bonds. The inverse fund for bonds, just so you know, is TBF, Tango Bravo Foxtrot, TBF. And as we look at bonds, we can see on this half-day chart where things have reverted back to going down. As we get into the 2-day and the weekly, you'll see how long things had gone down in bonds. They had gone down for quite a while. You can sort of see all that red bleeding out. Now, for the last many days, it had been going up, but of course, these last two-day candles heading down. Still green on the STC on that 2-day chart, and of course, still green on the weekly. And of course, if I pull this in and tighten it up, you can see just how long. This is weeks of bonds going down. Now, we had a few weeks in here starting in late June up through August and then dropped off again. So again, we've seen this latest rally in mid-November up to mid-December. And again, this is just 1 week. Maybe it'll start back again. Maybe bonds are just starting to collapse again. We'll wait, watch, and see. We're well below the 200 EMA, though. Still green on the STC on this weekly chart. So if bonds do start to collapse again, they have an opportunity to go short again. We'll wait and see. What about gold? Well, we had gold, of course, spring up yesterday. Let me stretch this out so we can see these candlesticks a little better. The last 2 times gold tried to take off on us, it didn't do it. It popped up and then right back down. Are we going to test, that previous high back on the 13th of December again? Or are we going to push up through it? Gold was down just a little bit, even though it did reach a higher high during the course of the day. By the time we got to the end of the day, it was down 0.17%. Initiated that trade in the morning yesterday. We're still just barely in the green. We'll see what gold does, if it's going to treat us righteous on this. We are green on the STC on that half-day chart. We're green on the 2-day chart, which is pushed through the 200 EMA, exponential moving average. And of course, the same on the weekly as we look at where gold is on the weekly chart. We're above the 200 EMA there. And again, not yet over the course of this week, haven't reached the high from last week, but appear to be sort of close to that, green on the STC above the 200. So everything has been primed for a while for gold to move up on us, but it has been staggering off on us, going up, dropping back down, going up, dropping back down. We'll see if this latest one will get us in the green, or maybe I should say in the gold. Now, let's take a look lastly at Bitcoin. Down for the day, 0.62%. Of course, Bitcoin red on the STC on that half-day mark. We can see where things just sort of peeled off as the day went along. We've got going into the third down candle on that 2-day chart after Bitcoin's latest little rally ended on that 2-day chart on Tuesday, the 13th and 14th of December. So again, still green on the STC. And when you look at the weekly, this will we'll tighten that up so you can sort of see, what Bitcoin has been up to, really running down, popping up a little bit at times. And I don't know if where we are now going to crash back down again. We do need to form a base somewhere. We need to form a bottom somewhere from which to rally. But each time we've hoped Bitcoin would do that, it's dropped again and again. And we can go further back in time and see that. So again, from a high of around 69,000, down, down, down. So we'll keep an eye on Bitcoin for you, let you know what we see. And of course, when we do hit a bottom in that, Bitcoin starts to rally, we'll be standing by, ready to practice trade it as we have in the past. We always love to hear from you. Hope that you're looking forward to a wonderful holiday season. Happy Hanukkah, Merry Christmas. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.